In time of uncertainties, if you want to protect your money, putting them into certificate of deposit could be one of the ways to go. Now, certificate of deposits used to be the thing of, I guess, the past, but nowadays, with this uncertain environment we're in, with tariffs and the fact that we might go into recession if things continue the way they are going right now, it is important to start thinking about your options. Of course, the stock market is always an option, but we know that comes with a lot of volatility. Today it's up, tomorrow it's down. Savings account is an option. Depending on the bank you use, you may do fairly okay, but we are worried about inflation. Hence the reason why savings accounts may not be the best option for you right now. We know that gold is doing well, but gold will not pay you dividends. It's usually a store of value. So what are the options and why are they good options right now? The two options I can think of would be certificate of deposits, not necessarily for the potential of making a lot of money, but more of capital preservation or preserving your money. The next one could be treasuries, but that is also in a very difficult environment with these tariffs and the trade war situation going on. That may not be the most ideal, right? But then we also have high yield savings accounts. Those are always an option. But for this particular video, I want us to focus on certificate of deposits. Now remember, certificate of deposits are some form of savings account with some restrictions. So in as much as the money is available to you, when you need it, you may incur penalties. So the money has to be stored, or in this case, let go for some time, in this case with the institution where you invest the money, or at least have the money saved. And there's often a time factor, so a time duration with certificate of deposits. So generally, I would often make these videos where I talk about the current rates of most of the common certificate of deposits that I see. Now, there's a ton of companies or banks, institutions, financial institutions that offer different rates, and I'm not going to cover all of them. But one thing I always say is that if you are part of a credit union, you may find better rates through credit unions, but there are some online accounts or bank accounts or institutions that you can be part of, and you are likely to even get good rates as well. And I'm going to share with you maybe 3 or 4 right now. My name is Steven, if you're new here, and I hope that you find value in this one. Please, if you do, don't forget to drop a like on it. So let's get to the first one. The first one here is Basque Bank. And to be honest, prior to me doing this video, making this video, I have not heard of that bank before. However, they're offering about 4.2% annual percentage yield. Of course, on this. Now, this is actually more of a savings account from what I can see. Let's see. Yeah, this is a savings account. Well, I also know that they offer certificate of deposits right there. And they are offering 4.35 APY for a 3-month CD and up to 4.2. So it's exactly similar to what you would get with the savings account as well. But let me show you this right here. You can see for 12 months, it goes up to 4.3%, which is not bad. But remember, there could often be some minimum requirements. So for example, there's a minimum deposit of $1,000. And of course, if you set it for 18 months or 12 months, you won't have access to that money for that period. I mean, you have access to it, but you're likely to incur penalties if you withdraw the money earlier than planned. And that is not something you want to do. So if you're going to invest in certificate deposits, make sure that it's something that you are willing to part away with for some time. Now, like I said, this might be an ideal situation for you. If you're not somebody who wants to take a lot of risk, certificate of deposits may be an option for you. The second one here is the one from Synchrony Bank, which I need to adjust this here so that you can see it. Synchrony Bank, we have the high yield savings account. They're offering up to 4% APY. The certificate deposit is offering up to 4.35%, and there's no minimum balance to open this account. So this might not be a bad choice. I mean, it's still better than 4.3, right? Especially for a year. And one thing to also keep in mind is that depending on the duration, the rates may be different. So for example, you have up to 4.35% APY for 3 months, 6 months, 12 months, and so forth. And of course, they have the bump up CD starting at 3%. And these ones are the types that, depending on what happens to rate, the rate of your certificate of deposit may change. And you have early withdrawal penalties. As you can see, one-time rate increase option available if offered rate increases, right? That's where the asterisk comes in to play. So that's something to keep in mind for those that may find this as a desirable, alternative to putting their money in a savings account, and something better than a high yield savings account as well. The next one here will be the Marcus by Goldman Sachs. I actually like this bank. And guess what? For a 14-month high yield CD, they're offering up to 4.4% APY. And now, of course, there's a minimum of $500 for this one, and the rates may change. It says this is a promotional term, expires 5/28, which is in a few days from now. Now, 4.4%, I think that's the highest I've seen so far. Not bad at all. Now, remember, a minimum balance to open means that you have to meet that minimum, and this will definitely also have a penalty. So keep that in mind. Now, the next one here will be the Ally Bank. This is another good online financial institution that you can consider. But again, these are just options. So they offer for 3 months, they offer 2.9%. For 4 months, they offer 4%. For 6 months, rather, they offer 4%. For 9 months, they offer 3.9% APY. 12 months is just 3.9%, and then it decreases from there on. And you may ask yourself, why does this change over time? The reason why they decrease the interest rate over time is really because you have the situation where the market, the Federal Reserve rates changes, right? So they try to anticipate what is likely to happen. And of course, they don't want to offer something that they are going to lose money on. Hence the reason why the rates will change depending on, especially if it's a long-term CD. I thought to share this information with you. If you have found value in this one, please don't forget to smash that like button, and I'd love to see you in the future video.